Good evening, friends. Sorry for the last Tuesday. I was supposed to do Equity Outlook webinar, but there was some medical emergency and I had to uh, postpone that webinar. And then, of course, I was not there in front of you throughout the week. Even I did not do any webinar with our PMS customer also because my mother is not keeping well and she's a little critical. That's the reason I could not do it. Even today, I was not very sure. Even though I line up the webinar, I'll be able to do it or not because her health is fluctuating every now and then. But very quickly, I'll start with my presentation before disclaimer. Then I'll start my presentation. The first half is over. Jan to June is over and the second half has begun. If you remember, I made some prediction in the beginning of 2025. Those predictions, do I need to revise it? Do I need to review it? And I'm going to do that. So you get an idea what should we expect in the second half of 2025. So that's also I'm going to cover in today's presentation. So please listen to me very carefully. I know you people to also jot it down, whatever the predictions are being made so that it helps you in terms of navigating the market cycle. Before that, a small disclaimer that webinar is just to enhance your understanding about the equity market. Please consult your financial advisor before buying or selling any stock. Investment in securities market are subject to market risk and past performance is no indicator of future returns. So if you look at what happened in the month of June, I think the market continued its upward journey. The small cap outperformed the mid cap and mid cap outperformed the large cap. So clear cut, that was what happened. Advanced decline ratio remained above 1 4 months in a row, but it was below what it was there in the month of April and May. So in some sense, that momentum has been to some extent been given up in the month of June. The cash volume again is the highest of 2025. We all know that the cash volume on NSE had started declining purely because of level of interest with the investors. Market sentiment was a little subdued, and that impacted that. But in the month of June, it was highest 1.1 lakh crore. And once I come to the data part, you would be able to see that how we have been doing that. FPI, third month in a row as a net inflow, but that inflow was little weak as compared to what it was there in the month of May. So that is really is not a very happy sign at that sense because the inflows would have been higher than the previous month, but that was not the case. While globally, agency after agency has been declining and reducing the world GDP growth, India seems to be doing quite well. Okay. And I'll show you some data. But market, the Indian economic resilience is very, very strong, and retail inflation has gone below 3%. So it's much comfort level it gives to the RBI in that sense. RBI did 100 bips rate cut in 2025. In the month of June, we saw 50 bips rate coming in from the RBI. It's really surprised everyone because everyone is expecting only 25 bips. The good part is that RBI expect inflation to remain benign the rest of 2025. But having said that, the future rate cuts in 2025 looks very, very slim. Of course, today's someone suggested that it could be a 25 bips more rate cut in 2025. Going by the present trend, it does not give a comfort level to see one more rate cut. If at all the rate cut is going to come, it may come in the December monetary policy. Don't expect this to happen in interim monetary policy from the RBI. GST collection remained very, very strong, but the one thing which has happened is that the pace of growth has been a little low in the month of June. Direct collection for FY 2025 reported 21% growth. I again repeat, the direct tax collection in the month for the year FY 2025 has been 21%. But The advance tax that everyone, you and me, have paid till 15 June, the data for FY 2026, 25, 20, there's a current financial year, has been very modest growth of 3.87%. And within that 3.87%, if I have to divide between the corporate and the non-corporate, the corporate has shown near about 5.86%, non-corporate, that is individual like you and me, declined by 2.68%. Why? Because we all know that if you have a 12 lakhs income, you don't have to pay any income tax, and government has gone on the record saying they will lose near about 1 lakh crore because of this. So don't expect, and of course, if the volume is low, the STT collection would be low. If people have not made capital gain, the capital gain tax would be low, and so on and so forth. So these are the reason the muted the 3.87%. We all know that monsoon arrived quite early as compared to what normally arrives at. And one of the biggest impact has happened to some of the seasonal products which are get consumed more in the summertime, like air conditioner, fans, and so on and so forth. Even some of the cold drinks company, basically, when they will announce the numbers, don't expect great numbers, because when you look at their numbers, they are more on a Y-on-Y basis, and you would see some numbers. I remember I telling you people that there could be a shortage of compressors for the air conditioner company. And today, when you look at it, the sales of AC have come down drastically because the monsoon was quite early. At the same time, you must have gone to the Accenture, which came out with the numbers. The comment is not very strong on the IT side. So why the demand outlook is very, very weak in the developed market, purely because of tariff uncertainty, and hence do not expect that the TCS is going to announce the numbers on 10th. Don't expect great numbers. Don't expect even the great commentary coming in from this. And there's a lot of pricing pressure which is happening within the IT companies. Crude oil price moved up in the month of June. Why? Because of Iran and Israel conflict. And of course, US also attacked, and there was a fear of a Strait of Hormuz coming under suspension kind of stuff. So we moved to $70 per barrel as compared to $64 per barrel in May. So you can see a substantial drop. And the worst part is that trend was going down, and suddenly got seen a spike. And the $5 on an average, which comes out to 8 to 9% on the May value, which is a substantial number. From domestic, let's move to the international. Eurozone inflation dropped below 2%, and hence ECB did 25 bps rate cut. While the ECB did the rate cuts, Federal Bank, Federal Reserve, Bank of Japan, Bank of England did not do any rate cut. Even for the month of July, which is going to be the last few days of July, the Fed is again going to meet. Do not expect any rate cut coming in from the Fed. But while that's been the case, Swiss Central Bank has reduced the rate to 0%. Why? Because the Swiss franc has appreciated significantly against the US dollar. What was $1.1 to buy 1 franc, now you need $1.26 to buy 1 franc. I again repeat, in January you needed only $1.1 to buy 1 franc. Now you need more dollar, 1.26 to buy 1 Swiss franc. So Swiss bank, that's the reason reduced to 0. Norway Central Bank surprisingly trimmed the rates from 4.5 to 4.25. Again, you can see the central banks across the world are moving in a very different kind of a trajectory. Some are hiking, some are reducing, some are maintaining status quo. There is no unison amongst the central banks. OECD came out with a prediction of the global economy. And they are saying that the world is experiencing the weakest post-COVID growth cycle right now, purely because of the tariff. And the World Bank for 2025 revised the global growth from 2.7 to 2.3 purely because of trade tension and policy uncertainty. This uncertainty, I think, should be the word for 2025. Central banks across the world and everyone, the one word basically keeps coming up in our conversation is uncertainty, uncertainty, uncertainty. As we discuss about the crude oil price, what happened with it moved up. Fortunately, ceasefire was equally quick. So it did move up and again brought down the prices. I must tell you that today there is a less demand, more supply for the crude oil. So do not expect crude oil price to remain sustained at the higher level even in future. One reason why crude oil price also moved up, why? Because they announced that we will close the Strait of Hormuz, which is a strategic channel for 20% of global oil and gas. But no one knows that Strait of Hormuz has never been closed, even during the Gulf War. So in future, if there is a further escalation of tension, there is escalation, do not expect Strait of Hormuz to get closed. Even Iran wants its products to be exported, and they use the same Strait of Hormuz to export that. I don't think they are fool to basically close that. Very quickly, we'll go through the numbers, and then I'll go back to what should we expect the second half of 2025. We made some prediction in the beginning of 2024-25. What has been the journey till now, vis-a-vis what we predicted, and what should we expect in the second half of 2025. So before that, very quickly, some data points. 4 months in a row, as you can see, am I right? We have seen more than one, but this 1.26 came down to 1.21 to 1.21 in the month of May and 1.09 in the month of June. So advanced decline ratio, even though 4 months in a row, the trend looks little weak. We were somewhere in the Feb 386 lakh crore or something. We added about 78 lakh crore since then. So I think the market cap is on a constant rise, and we were at 4, but still we are 13 lakh crore away from the what numbers we saw in September. And of course, this does include some of the IPOs that has, in fact, the number of IPOs that has come up is quite huge in the recent past. And I think that's one sign which doesn't go over well for the market. Cash volume is at 9 months high. We were somewhere about 1.21 is a September, then it declined 1.061, 1 month in aberration, 96, 91, 98, 111 and 1.13. Marginal up as compared to May, but it's a 9-month high. Still we are below as compared to September. Of course, as compared to June, which was the election month, we are quite far off from that. If you look at infra did well, IT for exchange did well, a small cap did well, as so as the mid cap, and FMCG indexed 2 months in a row is in a underperforming category. If you remember, 2025, I predicted that FMCG one of the best performing sector for 2025. It has not happened. So am I going to revise my prediction based on that? Please hold on. I'm going to discuss that also. Anyway, Nifty 50, 78% company basically reported, but Geo up by 14%, Grasim up by 12%, Eternal nothing but the Zomato 10.8, Sriram Finance 10.6, Trent which has moved up, and of course we all know in the month of July it came down because of the prediction, the assumption now this one, the growth would be little less than what was expected from the trend, and that basically pulled down. But nonetheless, Tata Motors down, Bajaj Auto down, Hindustan Unilever down, Hero. You can see more auto companies in this, clearly gives an idea about, and FMCG companies gives you some idea about what was the sentiment in the Nifty 50 companies in the month of June. FPI 14,590 crore, lower than 19,860 crore, and overall still negative at 77,901 crore in 2025. Fortunately, the domestic institutional pumped in 72,000 crore. And that really basically total combined 14 plus 72 almost give us about 87,000 crore of an inflow, which is basically a very equivalent to kind of a growth that we saw in the month of May. So 2 months in a row, we saw more than 80,000 crore kind of an inflow coming in from the institutional investors. Again, second month in a row, the US market did well as compared to Indian market. That's what has happened. This is the data in terms of month-wise what has happened. So YTD, the Nifty 50 is up by 7.9, mid cap is marginally up at 0.89, and the small cap is down by 0.89. So there is no kind of a returns which has been given by mid and small cap, but Nifty 50 given 7.9% return. 55% of the market cap is commanding at least 30 PE, just to give a flavor of what's happening on the valuation side, what is happening. And as the market keep rising, the valuation will become more rich. Why? Because the growth in earnings for June quarter is not expected very great. The 27 times market cap PE ratio of the Indian market. Rupee has held quite strong. We had a very scare of 1.13, 1.04 in the month of Jan and Feb, and then we saw smart gain happening in March and April. Again, we saw some depreciation happening again in Rupee against the dollar, but overall we are marginally down by 0.17. So there is not much. Rupee has not come under pressure too much. Crude oil price, which are talking about 80, 77, 72, 67, 64, again moved up to 69, and as on 30th Jan it was 68.81. So crude should remain little soft only. Historically, July has been one of the good months, except 2019, which went down by 5%. July on an average has given positive returns to the market. I don't know whether this is going to happen this month or not, but historically that's what the trend shows. So what should we expect going forward? I think liberation tariff expires on 9th July. No one has a clarity between what's going to happen with India, forget about India, even other parts of the other countries, how it's going to happen. Yesterday, Trump made a statement that BRICS country will have additional 10%, and China basically said this is not the way it should be done. So we don't know what's going to happen with China. But let's talk about India. No clarity. There are three possibilities I'm looking at it. Number one possibility, we might have a mini deal. In other words, some of the contentious issue has been kept aside, and we might see some basic framework there. Number two, there is an extension of the deadline. Anyway, Trump has given August as a extension to tariff to come in picture, come in force. Anyway, it's given an indication that the no tariff would get levied on 9th July. So there could be extension. I don't know whether the extension is for 1 month, 2 months, 3 months, 5 months. We don't know. Third option is that no deal at all. There is no deal happen between India and the US, and hence India has to pay higher duty when it exports its goods to the US market. What should we expect going forward? The result season, which will kick in. Don't expect great numbers coming in from the India Inc. Because the underlying theme doesn't look very, very strong for India Inc. earnings. And Nifty 50 earnings are likely to be lower than what it was there for June 2024. IT service, don't expect good numbers. The commentary would be weak. Pricing pressure could be seen as and when they talk about it. And hence, this company are unlikely to do well. Some of the consumer durable companies are not likely to come out with the good numbers, so don't get surprised with that because of monsoon. The monsoon, while on one hand we will look at the overall monsoon, I think on one concern till now, the spread of the monsoon. There are some pockets where we have received excess monsoon, and there are certain pockets we have received deficit monsoons. I think market will closely watch the spread of the monsoon. the first half we have seen extreme volatility. Second half we expect some kind of a less volatility. If you read my blog, I've written that more tailwinds as compared to headwinds in the second half. Why? Because of RBI 100 bips rate cut, the transmission will happen, that effect will come in, tax bonanza will come in, geopolitical tension which was there, make it subside, and which could give a better second half of 2025. With this, let me revisit my 2025 prediction. Am I going to revisit? I'll go step by step. Let me start with our Nifty 50. What was my prediction for Nifty 50? 10 to 20% probability appreciation with 55% probability. That's the most probable outcome I had seen. What happened in first 6 months? We are up by 7.9%. So based on this, am I revising my target of 10 to 20% for Nifty 50? The answer is no. I maintain that Nifty 50 will give near about 10 to 20% appreciation in calendar year 2025. Let's move to the mid and small cap. I had stated mid and small cap will give muted performance, muted returns. And my webinar is available. You can watch that webinar. It's available. Am I right, Amir? Yeah, it's all available. So you can watch that webinar. Till now, in first 6 months, the mid cap is only 0.89% up and small cap is down by 0.88%. So till now, the mid and small cap is in muted performance. Am I changing my what we call outlook for 2025 based on this? The answer is no. Having said that, don't get confused with the indices performance with the sums company may do well. And ultimately, what matters is the stock that you hold in the portfolio. Let's move on in sectors. There are 3 sectors I had suggested will do well: banks, NBFCs, infra capital goods, and FMCG. While banks and NBFCs done well, given more than 10% return YTD, the FMCG has not lived up to the expectation. So am I now believe that NBFCs and banks will not do well, or do I believe FMCG will not do well? My answer is that we still maintain banks, NBFC, infra capital goods, and FMCG should do well in 2025. What does this mean is that the second half FMCG should do well to compensate for the underperformance in the first half of 2025. That's what I say. I'm not changing my prediction even for the sectors. Let's come to the FPI inflow. I had said most probably FPI will invest 55,000 to 1 lakh crore net inflow in 2025. But in the first 6 months, there is an outflow of 77,000 crore, almost 78,000 crore. So am I revising my prediction that FPI will basically now will be negative for the full year? If not negative, the inflow could be muted. The answer is no. I do expect FPI to put in anywhere between 50,000 to 1 lakh crore net inflow. In other words, we should expect about 1.3 lakh crore at least kind of a net inflow in the next 6 months of 2025. On an average, I am expecting 20,000 crore at least net inflow coming in every month, month after month till December. Silver. Again, I said 15 to 20% gain in 2025. What has happened in first 6 months? 25% gain. And in this case, I am revising my target and I am upgrading that silver should give you much higher returns as compared to a 15 to 20% return. It's already 25% return. So logically, and I'll come to gold, you will realize where I'm coming from. I'm upgrading and silver can give higher returns. So what I'm trying to say is that silver can extend the gain from the 25%. If you go back to my prediction, I've said that I bought on my Akshaya Tritiya very small quantity of gold and few kgs of silver. I'm happy to tell you that from the Akshay Tritiya till today I have not seen my portfolio because I was busy throughout the day in a meeting, because I also came to office after a long time. So I was busy in the meetings, I did not see. But till Friday, I think the gold from Akshay Tritiya till was up by about 1% only. But the silver was up by 11%. So that gives an idea. So I do expect silver to extend the gain. But for gold, I'm not saying so. So gold, I had predicted 15% gain in 2025. It has already given 26%. Most probably that gain may be given up in the second half. So I still maintain gold can give 15% return only in 2025, despite in the first 6 months it's overshoot our expectation. Crude oil, if you go back, I said $70 to $80 per barrel with 65% probability. India's basket for first 6 months is $72 per barrel. And hence, I believe that this 2025 will be most probably closer to $70 as compared to $80 per barrel. Am I right? So that's again is a good news for the Indian market. Rupee, I had predicted most probably 88 rupees. In first 6 months, we are almost at the same level of 2024. But I do expect Rupee to depreciate by a couple of rupees, and hence I'm not revising my target for Rupee also, and I maintain that it would be at 88. With this, let's open the floor for question answer. The reason I've gone little quick because I wanted to cover more question and answer, because always people keep complaining कि आपका question answer थोड़ा कम हो जाता है. So that's the thing. Yes, please go ahead. Renuka, Suresh, Sanjali sir, wish you prayers for the Mojafel is with you regarding your mother's health. Wish you for regard. Thanks a lot everyone for your good wishes. Please keep her in your prayer. Is critical. Let's hope for the best. Thanks a lot. Frank, hello Sunil, greetings with the large cap leading the recovery. Do you see this as a structural shift, as temporary flight to safety? What is the signal should long-term investors watch for a potential rotation back to mid and small cap? What valuation metrics and macro indicators do you believe or are most predictive for long-term equity returns in the current environment? So a couple of questions. Is it a structural shift that large cap will do better as compared to mid and small cap? The answer is no. It's a more of a temporary kind of a phenomena. Indian market, all emerging markets, normally the small cap do better as compared to mid and small cap, mid does better than the large cap. But if you go back to my equity outlook 2025, and again I repeat, it's all available on the YouTube channel. Please watch it. I did mention the reason why it will give muted returns, because last 3 years, the mid and small cap has given bountiful returns, sir. So whenever that has happened, the law of average has to come in. And that's exactly what is happening. So I think this is more like a short-term phenomena. It's not a structural thing. What signal one should look? I think always I'll go back and I give that data. I don't know whether Frank you remember that. I look at the total market cap, total India's market cap, and I minus from A group companies. And if that percentage declines to some level, it gives an indication the bottom has come in the mid and small cap, and hence that's an indicator I normally look at it, which I always present in my equity outlook at the beginning of the year. And at that point of time, if you look at the data, which was giving me about 11-12%, if my memory serves me right, which I said that's one of the reasons I said that it could be muted returns coming in from that. So I think that's the matrix that you should look at it to give you a fair understanding. Again, I repeat, total market cap minus A group market cap companies. It's all available on bseindia.com. That data is available. You don't have to pay anyone this one. It's all available public domain. You do that and you'll get an idea. But if required, Frank, I'll try to cover this matrix again in my next webinar. Just yaad dila dena. I'll try to cover that, sir, so that you get an idea what matrix you should use it to get an understanding. But having said that, if I have to fast forward 1 year down the line, the mid and small cap should give better returns as compared to large cap. Despite having said that, 2025, mid and small cap will give muted returns. So understand the difference what I'm trying to say. Bhavesh is saying, what stock of the week, if the target was not achieved within the given target time, what should be done? Either we'll extend that timeline or we'll advise you to exit. In both the case, we'll come back to you, sir. Don't worry. Sarang sir, Sunil sir, the query is more towards overall perspective of markets mojo. What I'm observing is that the focus of entire is infinity portfolio. I'm a Mojo 1 subscriber with 10 years subscription and have felt that the profit booking calls in Mojo are not being triggered at the right timing and such stocks are going losses. I request the team to take Mojo so seriously and review this strategy. Not everyone is an infinity user. So Sarang sir, I must tell you one thing. It's wrong to say that everyone focuses only on infinity portfolio. Tell me, sir, when did I come in front of you and talk about infinity portfolio? Never. Am I right? Am I part of infinity launch? Have I come and discussed with you anything? No. And there is a different team for PMS, there is a different team for infinity, there is a different team for model portfolio. So don't get a model portfolio, nothing has been triggered for profit booking, that nothing to do with the infinity at all. Because based on that IP, the stocks are not coming for exit. That's why it's not getting exited from the model portfolio. So don't get confused, sir, Sarang sir. There are independent team working on infinity, independent team for the model portfolio, independent team for the PMS. The whole world, the whole market is not focusing on infinity, sir. So, no, that's not right. Thedus sir, hi Sunil, thank you for your valuable insight. There have been many new product launches by the Mojo team recently. Congratulations for the same. I would request you to throw some light on some of the previous products such as mutual fund portfolio. Are you still focusing on that? Sir, I am not a right person to answer that because I moved to the PMS side of the business. But Amir, ये सवाल लेके just someone will respond to you. The person who manages mutual fund will be the right person to. Harshis को भेजवा दीजिए please. What is your option for the overall IT sector and opinion, I mean to say, and IT and mid-cap IT, just particularly Concor for person are still seeing a strong buy in markets mojo. So Dulkesh sir, I will not be able to comment company specific. Go with the score available on the website and you take a call. What I'm saying is the overall IT sector looks little challenging, including mid-cap. You will be the first one to launch the product. But someone else will come with a smarter, better product and you'll be relegated to this one. I remember we discussed about one of the leading players in two-wheeler, electric vehicle in India. That company came out with an IPO. And when I was discussing with Bhavesh and I told him, and he said, no, we are the exception kind of stuff. We are not the market leader. We are not the powerful leader. We are not the first one to launch this. And hence you can't apply that. Today we know that company is moved to number 3, which was number 1 when they came out with their IPO, Ola I'm talking about. The same way Tesla will find it extremely difficult because, we have example in the technology related industry which is called no first mover advantage. The first mobile phone was not from Apple. The first browser was not Google Chrome. The first laptop was not manufactured by Dell or HP. And there are example after example which shows that in technology world there is nothing called first mover advantage. So my impression is that the Tesla sale may underperform. But will it have an impact on the US market? I don't know. Whether it's a global market, answer is no. US market, it may not have. But I don't think, even though Elon Musk basically floated party, so it's not going to be easy for him actually. So is the US market going to get fluctuate because of this? Most really answer is no. Probability is 5% for US market. Probability for global market is 0.01%. How come have you moved from large cap to mid and small cap to solve PMS portfolio? Yes, sir, we have done that. We have moved to the small and mid cap. Our allocation has gone up. That you are right. Nimesh sir, good evening. Sir, good gold total 50% or from where you expect 50%, sir, means 1.15 lakh. No. I predicted that 15% total gain in for the year. It's overshot my expectations. So I do expect gold to decline in the second half of 2025. In fact, other day I was listening to one of the players from the jewelry industry, and he was saying the 80% decline in the footfall in the jewelry business. Not only that, there's another article which came that the RBI did not buy a single gold, I think, in this financial year. So my sense is because the higher prices basically have its own impact. So I expect gold to decline in the second half of 2025 to give 15% return for the full year. I did one exhaustive webinar with our PMS customer where I've explained the complete gold as an assets class. Markets mojo upload data to SEBI website regarding PMS. Then please provide the PMS company name, sir. Oh, our PMS company is Markets Mojo Asset Management, sir. It's there on my. You look at it's there, always there. You can see this on the screen. Markets Mojo Asset Management. That's our name of the PMS company, sir. यहाँ पे भी है ना, लोगो में भी है ना भाई, आमिर, yeah. IB, plus please accept my best wishes on your mother's health. Thanks a lot, sir. We hear that a lot of promoters are liquidating their stocks and FPR net sellers YTD. What is your reading that, and as per you, what is your holding as per the equity markets? What is holding up the equity market in times of global uncertainty? What makes India stand out? So first, let me answer the first part. A lot of promoters are selling is not a good sign. Let me be very honest with you. Normally is a bad sign. And FPI also selling. So what is holding up the equity market? I think the DII, domestic institutional investors, purely because of domestic flow has been quite strong. If you look at May and June, combined institutional liquidity, despite very muted inflow from FPI, domestic DI has pumped in good money. Even retail investors like you and me are putting in money. So that's another all-time high, as I told you, 2025 all-time 2025 highest cash volume in the month of June, which gives an idea the in domestic inflow is quite strong. Now your question is that in global uncertainty, why Indian markets stand out? Few things. Falling crude oil price favors India. Inflation below 3% favors. RBI doing 100 bips rate cut, very aggressive rate cut, that favors equity market. Government of India giving 1 lakh crore tax rebate, that favors this one. These are the factors that makes India. And second thing, see, if India is not involved in any kind of in fact, this geopolitical situation turning out to be blazing in disguise for us. Why? Because the crude is, despite, so normally what has happened, whenever the geopolitical tension used to happen, the crude used to flare up, it's coming down. India has been able to buy cheaper crude from Russia. So these are, and of course the monsoon is quite good, and in India monsoon plays a very important role. The expectation is that monsoon would be good. So these are the factors which basically makes India stand out. No one believes that India is going to grow less than 6% in 2025. Each and every predictions are at least saying 6%, which is a very good growth when the global GDP coming expected from 2.6 to 2.2. India doing 6 is 3 times more than what the global average is. Please do some light on the recent alleged manipulation of option trade by Jain State and how should we read this? So, RB said, I'm planning to do a very exclusive webinar only on the Jain State. You may not be aware, but this episode started not in India. It started in April 2024 in Manhattan Court. And the case was filed by Jane Street against another fund, hedge fund. Why? Because the two of the fund manager, the trader, left that company Jane Street and joined this. And the Jane Street said that my revenue came down. In this report, they stated that they basically made $1 billion in 2023 in the Indian market. So I want to explain you. So see, try to understand. Jane Street made money at whose cost? It's a zero-sum game. If someone is making money, that means someone else is losing money. Am I right? The Jane Street made money at those retail investors who traded in futures and options market. Now I must tell you that Jane Street is using such a powerful algorithm as his ability to manipulate the data. The retail investors have no chance to stand against that. आप समझने की कोशिश करो. In fact, I kept saying, coming again and again saying, please stay away from futures and options. The reason I said, because we are fighting against the giant who has tons of data and tons of servers closer to this one. आप उसको कैसे beat कर पाओगे? Yes, you may be successful, maybe 3 months, 6 months, 1 year, 2 years. Eventually, you are going to lose money. Because we are fighting against a very powerful force. So how should you read this? My reading is very simple. Some players can manipulate the market, especially futures and options market. And because of you stand no chance to win against them. If you are doing your futures and options, not only to RBs or you, but those who are attending this webinar, please be careful. Please tell your friends, relatives, your well-wishers, even your enemies, to stay away from the futures and options. It's not a market. It's not an equal playing field for the retail investors versus the giants like Jane Street. You know the amount of money they made, and they all made this money at the cost of retail investors. Sandeep Das, is it a good time to buy old stocks at this juncture? We do have some of the mojo stock coming in. Maybe yes. Answer is yes. We have refinery. Sorry, when I said it's a refinery company which is coming in as a mojo stock, these are good companies to get in. Yeti sir is saying, good evening. Gold is all over us. World, would you care to comment on the viability of investing gold via Deccan Gold Mine, please? Is it profitable? If not, will it be profitable in the coming 6 months or 1 year? Is that India's only gold mine? I believe. Thanks. Again, sir, Yeti sir, I will not be able to comment company specific. But I did give you my view on gold. Gold is likely to give negative returns in the second half of 2025. Gold is going to likely to give negative returns into second half of 2025, and because of that, the 2025 returns should be in the region of 15%. Please go through our score on Deccan Gold Mine. Financials available, all data is available. You can go through that and do that, but I will not be able to comment company specific. I have a restriction from my compliance team not to talk company specific. Vasudevan says, I have 2 model portfolio and 1 infinity portfolio. I'm quite happy with my performance of my model portfolio. Thanks a lot, sir. So this reinforces the fact that everyone is not focused on infinity only. I am not focused on this. My model portfolio team is not. Of course, so sometimes you get assumed that since Mohit is coming in front of an infinity portfolio, that means everyone is focused on Mohit. Since everyone is aligned to the Mohit only. No, answer is wrong. Mohit has created different product champion for each product. And they are basically their job is to look after that, and they've been evaluated based on that only. So thanks a lot, Vasudevan sir, putting this and clarifying this. Nimesh sir, PMS name, sir, Marcus Mojo Assets Management. That's the name of the company we have in PMS. No more questions or company specific question? No more questions. Okay. So I think I was a little quick in terms of responding to queries without realizing that number of questions are less. So thanks a lot everyone taking time out again. If the time permits, I'll be in front of with our PMS customer on Thursday. time permits, because of medical emergency I'm talking about. Otherwise, as and when the time is available, I'll be in front of you. Take care, good night, and thanks for your good wishes for my brother. Thanks a lot.